I know it sounds ludicrous. I know it sounds crazy. It's the kind of thing that you tell people, well, it hasn't managed to get above 50 for decades and decades, and now you want to tell me it's going to $600 an ounce? Well, yeah, well, it's not going to happen overnight. It's a process. It's going to take perhaps a year or two. But yes, if it breaks out, it's going to draw the attention of many investors. And if they start piling into silver, then you can really see some fireworks.
Hello and welcome. Thanks for tuning in today. The spot price for silver just passed $40 per ounce for the first time in 14 years, and the summer is ending. Gold and silver typically perform well in the fall, and rate cuts can also cause the metals to move up in price. In Jerome Powell's recent speech, he hinted that we could see a rate cut in September. Here to dive into these topics with us is Oren Elbaz, also known as the Silver Hermit. Oren, welcome back. It's great to speak with you today.
Hello, how do you do?
Doing great. Thank you for being here. Silver has broken over $40 per ounce, and many people are wondering what could be in store for silver this fall. Some analysts are now calling for silver to increase in price. Oren, what do you think about silver breaking through $40, and where could you see it going in the near future?
Well, first of all, let's make it clear we are in the process of a breakout. Such breakouts, they're usually a process. That means that you go through one level of resistance. Sometimes you have a few more that you need to conquer before you see like the big move. But I'm quite confident that we are on our way and that we're going to see some significant gains both in gold and in silver in the coming days and weeks.
All right, well, I like the sounds of that. Gold and silver seem to have some seasonal patterns, and we are leaving the summer doldrums now. September is often the start of a leg up for the metals, and if it's coupled with a rate cut, this could be really exciting for the metals. Now, when you say that we are starting a leg up, where do you think we might see the silver price go this fall?
Well, in order to know what's going on with silver, we first need to have a look at gold because usually silver follows gold, although eventually it exceeds its performance percentage-wise. So when I have a look at the chart of gold, I see that we had that pennant formation for a few months since April. Gold was moving between these two converging trend lines, and it just managed to break out above the upper trend line. And I think gold can run right now in the coming weeks. I think it can go as high as $4,000 easily, but it can also exceed $4,000 and run even further. Just as easily, I think by the end of the year, we can see $5,000. The metals are going parabolic here, so it's very difficult to put an exact price target.
Well, that is exciting. $4,000 before the end of the year would be, a nice big move up. And if we got all the way up to 5,000, man, that would be really great.
Well, I know it sounds kind of extreme, but if you think about it, we do see the possibility of some kind of a crisis this fall. And in the situation of a crisis, when central banks are panicking and firing up the printing press again, suddenly it makes sense that inflation expectations are going to spike and gold is going to shoot up. So it's perfectly possible given the right environment.
Sure, that makes sense. With the rate cuts that are coming up, I mean, this really could be rocket fuel for gold. It looks like it's been consolidating since April here. And so it wouldn't surprise me if you're right and we do see a big leg up in gold.
Yeah. As a matter of fact, I think that this announcement by Jerome Powell lately at Jackson Hole that he's considering cutting rates, even though inflation is still above 2%, which is the Fed's long-term target, I think it demonstrates a capitulation by the Fed. It's as though they're not going to fight inflation anymore, And this is probably the push that gold needed in order to break out. I guess that they're doing that because they're seeing weakness in the economy, in the overall economy. And they might be concerned that some kind of financial crisis is coming this fall. And so they are preempting that financial crisis by cutting rates right here at this point. And the market is sensing it. And this is why I think gold finally broke out. Now, of course, if we move to silver, silver follows gold. Silver needed that signal from gold. What is very obvious about the chart of silver is that it had this resistance line. It was this trend line, which you and I mentioned in our previous shows, that connects all the highs since the beginning of 2023. And around, I think, July, we failed again to go through that line. That's when we topped. Silver topped at $39, you may recall. And then we had to pull back all the way to 36, 37 region.
Yes.
And then we started rallying again. And just now, just in the last couple of days, we busted through that line. Now, markets have this, tendency to do a back and forth, to take two steps forward, one step back. They always do that. So, because there was this holiday in the United States, you had the Labor Day, I
Yes,
believe. You
that's
had this,
correct.
you had the Labor Day weekend. So as a result of that weekend, we have on the chart, on the daily chart of gold and silver, we have as though this gap, they gapped up. And for some reason, markets don't like gaps. There's this tendency of gaps to fill. That means that usually you're going to see the price falling down back to the breakout level, retesting the breakout level before it continues in its trajectory up. So I wouldn't be surprised if we do see gold retreat to the breakout level, which I put at $34.40 per ounce, and silver retesting, I think, $40 per ounce, something like that, before they move higher. But definitely, their general direction is up, up, up.
Interesting. Well, folks, just to let you know, we are recording this late on Labor Day in the US for me and early in the morning for Oren. What we saw recently was silver was at 39.74. The Shanghai market opened, and since then, it has gone all the way up to $40.80 per ounce. So it's gone up in price by a little over a dollar. So this has been very exciting. And I know what you mean about the market seeming like they take two steps forward and one step back, and two steps forward and one step back. And everyone just has to be really patient while we work our way through this process.
Yes. And by the way, this is why we recommend people not use futures contracts and not use leverage and stuff like that, and only stack the physical metals. Because, people who bet big on silver and suddenly they see the market change direction and fall back to 40 or perhaps a little below 40, they can panic. They can just sell, or sometimes they put automatic stop loss orders, and then they get kicked out of their position by the market before they get a chance to benefit from it. And this is something which stackers don't have to worry about, because you have your stack, your physical stack. You're not going to sell it if the price suddenly drops back to 40 very briefly. You won't even notice that it happened. You'll get up in the morning, you see that it touched 40 once more, and then it shot up all the way to 42, for instance. You won't even know that it happened. You won't even notice.
Yeah, you'll just sleep through it. And as they say, if you don't hold it, you don't own it. I agree. It does seem like Powell is caving to pressure from the markets. Of course, in his recent speech, he'd indicated that conditions may warrant a rate cut, and then both metals responded by moving up right afterwards. And in regards to silver this fall, well, silver was recently added to the critical minerals draft list, and we'll see if it ends up on the final list, but that alone has caught a lot of attention to it. And Saudi Arabia has recently bought SLV shares. So these are both really bullish for silver.
Yeah, so you have both the technical picture and the fundamental picture converging. Both of them are indicating that the prices of the precious metals should be rising right now, and that's a good thing. You want to see like all the stars aligning. This is exactly what you want to see. I want to show you another indicator. That's the gold to silver ratio. And the gold to silver ratio just had an important breakdown. You can see that it had this huge, again, a pennant formation. It was moving between two converging trend lines since 2021, since the original silver squeeze event. And this pennant, it seemed as though it's never going to break down. As a matter of fact, we had a breakout in early 2025. That's when gold started rallying and silver was
It's,
underperforming.
yeah, it was just stagnant at the time.
Yeah. So we saw the gold to silver ratio starting to rally, exceeding 100, but that was probably unsustainable, as we said at the time. We didn't think it's going to last. And now we're seeing the ratio breaking down back into this pennant. And this is kind of an indication to me that it's headed to at least to the lower boundary of that pennant, which would put it at around 77. Now, just imagine if the ratio goes to 77, that means a price of silver of about $45 an ounce. And if the price of gold rallies on top of that, then it's even above $45 an ounce. So it's kind of an indication that we are headed towards the all-time high of $50 an ounce, or at least that region. So we are probably going to retest that region of $50 an ounce pretty soon. I think it can happen very rapidly.
Yeah, that is exciting for sure.
Now, I want to take a step back and just remind people of the famous cup and handle formation, this multi-decade cup and handle formation, which started at 1980. We've had these two tops at $50 an ounce in 1980 and in 2011, and we are about to break out of that formation. And if you look at the logarithmic chart, and you take the amplitude of that cup and handle formation, which took it from $3.50 to 50, and you check to see what kind of a target it would give you if you were to break out of 50 and have the exact same move, it would take you somewhere around $600 an ounce. And I know it sounds ludicrous. I know it sounds crazy. It's the kind of thing that you tell people, well, it hasn't managed to get above 50 for decades and decades, and now you want to tell me it's going to $600 an ounce? Well, yeah, well, it's not going to happen overnight. It's a process. It's going to take perhaps a year or two. But yes, if it breaks out, it's going to draw the attention of many investors. And if they start piling into silver, then you can really see some fireworks.
So silver is still cheap right now. The potential for silver is off the charts, and people could be really shocked about what it could do. Just think about some of the moves Bitcoin has made, for example.
Yeah.
And this is a small market, so this thing could really get cooking.
Yeah. So one last chart that I want to show today is of the GDXJ. That's the Junior Gold Miners ETF. Now, that's a popular ETF. We normally don't talk so much about mining stocks. On this show, we focus on the physical metals. And of course, I believe that before you even consider investing in mining stocks, you should have a sizable physical position, both in gold and silver. But for those of you who do already have that position and are interested in mining stocks, I want to alert you to the fact that this ETF had back in 2011 a top at $180. And right now, although it has gone up considerably since the beginning of the year. It's trading at only at $80. So it has a long way to run just in order to meet its previous all-time high. And assuming that the metals are going to rally so dramatically as the charts suggest, then we could see this ETF retesting its all-time high pretty quickly. Now, there is a hurdle that it's going to have to overcome. There is, again, this trend line which connects the previous tops from 2014, 2016, and 2020. And we are just about to hit that line. Now, that's a good question. Why are we, as gold is breaking out, the GDXJ is nearing some kind of a resistance? Well, that perhaps means that we need to reach that level of, I think, 82, 83, and then retreat just for a short while before we try and crack through that resistance. This could be an indication that we're headed towards some kind of a crisis, some kind of financial crisis, which will affect stocks, including the mining stocks, for instance. It could mean a whole lot of things. But I think long term, chances are that we're going to go through that resistance line and that we're headed much higher. Of course, nothing moves in a straight line. There's always some back and forth. There's always some consolidation. So be careful. Don't use leverage. Don't use options. Don't use futures. Just if you want to invest in the stocks, just buy the stocks and hold on.
Interesting. So the junior gold miners also have a lot of potential right now. And since they moved together in the past, it would make sense that they should start moving soon. Well, thank you so much for coming on to share your thoughts on these various topics today. Everyone, please check out his links in the description. Thank you so much for watching. Don't forget to hit the like button and consider subscribing to the channel for more content like this. I hope you all have a great day out there, and we will catch you in the next video.
Thank you for listening to the Silver Hermit podcast. If you like this content, please donate in the link which appears in the description below. Please subscribe to this channel and share it with your friends and family. Hit the bell icon to be notified whenever I release a new video. Remember, I'm not a licensed financial advisor. This video is intended for general informational purposes only and should not be regarded as investment advice. Before taking any investment decision, please consult with a professional financial advisor who may assess your personal investment objectives and needs.